Hi, thank you for joining us again on Fasanara's Digital Dividend podcast. I'm Matt Koos, the head of origination here at Fasanara, and today with me I have Margarita Morrow, our senior associate from the investments team, and then we're joined by Christoph Nicola, the founder and CEO of Tilta, a new German digital lender who has just entered into the space, and we are very excited to have as one of the newest partner platforms on the Fasanara digital lending platform. Christoph, thank you for being with us today.
Thanks for having me, Margarita and Matt.
On the digital dividend, we do this podcast really to shine a spotlight on the lending activities of some of the strongest and most innovative fintech lenders within our portfolio. And as such, we have a lot of listeners who are also in the fintech lending space, some of whom are also younger people who are starting up their first lending businesses or coming into the lending sector. And so this podcast often can be a frame of reference for people on lessons learned, on the journey of founding a firm and starting it up. And so, if you could maybe just first start out with a high level overview of who Tilta is and what business line you're in.
Yeah, happy to do so. So I'm super excited to be here. Let me share you what we do and what problem we solve. Tilta is, first of all, a B2B fintech founded 21 months ago by my two co-founders, Anno and Ingmar, and myself. And today we are a fantastic team of 17 fintech experts. We are a payment service provider for digital B2B transactions. That means we only focus on transactions where businesses transact with other business. Imagine a construction company buying a heat pump to basically install it in one of their consumers' homes. You could say there are many companies in the B2B transaction space. What do you do different? What's special about you? We only focus on credit-backed payments. With our solution, we are providing fast and risk-free payout to the seller as soon as the transaction is completed, and the buyer has deferred payment terms, so that means he can pay later than the seller gets his money. Essentially, we are solving the inherent working capital gap at the point of sale and help move B2B transactions online for our partners.
Thank you for the introduction. So, can you please tell us why you decided to focus on this particular area and how you developed this business in the first place?
Yeah, thank you, Margarita. So upfront, it's Tilta is surely based on our learnings, which in our past fintech experience. We were operating both in the SME lending space, but also in the B2C buy now, pay later space. And if I could name three things, the first is deliberate decision where to play. We deeply believe there's a solution missing for credit-backed payment terms and help B2B trade move online. B2B trade is massive. It's 5 times the size of B2C, but still largely remains offline. So it's essentially 15 years behind B2C. And why is that the case? It's the case because the preferred payment method in the B2B space remains deferred payment and payment on invoice. And this has not been transferred into online. This is why we decided to help B2B companies, B2B marketplaces, with our solution, with our B2B infrastructure to solution, to move online and solve the inherent working capital gap where the seller wants to get his money first and the buyer wants to pay once he finished his services to his customers.
And Christoph, that's good to hear because at the end of the day, it aligns very closely with Fasanar's overall mission of enabling lenders who are fueling the SME economy that's the backbone of the European economy as a whole. Can't be enough said about the importance of the Mittelstand in Germany, providing the majority of jobs and accounting for the majority of GDP in the German economy. Having said that, we have seen absolutely the other phenomenon you mentioned, which is that so much of business is still done on a paper basis. There's a word for it in Germany, Papierwirtschaft, and we definitely see that still prevalent in even the lending and payment space. So I'd be curious to know from your perspective, Tilta coming in as a B2B payment service provider, which has a lending element to the business there to solve a working capital gap. What is your USP there? How is your offering a bit different than the offering of some of the other lenders that we might have seen pop up over the last 3 or 4 years?
Yeah, great question, Matt. So first of all, that's also what we see. Businesses want to pay online and use their preferred payment method online. Similar to what happened 15 years ago in the B2C space, where you were able to finally pay buy now, pay later, so pay on deferred payment terms online. We are not there yet in the B2B trade. So what's the difference of Tilta is, first of all, we're an infrastructure provider, so we are white labeled. We don't put our brand on this, so that our partners, B2B marketplaces or B2B e-commerce companies, can basically customize the payment terms and the fees charged to their customers as they want. However, there's also another key difference why you simply can't put a B2C buy now, pay later method on it. It is in the inherence of the B2B transactions. We believe businesses need dependability for their transactions. So customers, in our case, receive a pre-approved working capital facility they can use captive on our B2B marketplace partner or B2B customer we work with. This gives them dependability. So imagine a handyman being on a construction site and needing to buy heat pumps for 15,000 euros. He doesn't want to be declined in the checkout that it doesn't work. He wants to log into his preferred supplier, then see that he has enough credit facility or trade account available and can basically presume with his transaction and focus what he does best, which is doing his work. What we also do different, as said, we are white labeled an infrastructure provider, and we believe holistic underwriting based on a broad data set is key. There's clear evidence, both of our past experience, but also by several studies, that you can't underwrite B2B and large B2B transactions simply in 10 milliseconds with just credit bureau data. That's why we leverage both open banking data, but also the proprietary transaction behavior on the marketplace or on the marketplace of our partners to provide their end customers a higher credit facility and a higher acceptance rate, i.e. allowing our partners, the marketplaces and e-commerce sites, to do more business and their customers to transact more on their point of sale.
And so it sounds like you're hitting kind of all the key features there from a perspective of a seller or a merchant who's looking for a financing provider that can enable them to kind of reach a wider group of potential customers, to provide them an assurance in the ability to provide funding to the widest group of customers, while also letting them maintain control of the transaction from start to finish. So you're not going to send them through your own portal. The buyer is going to be seeing essentially the merchant's checkout, the merchant's branding, and it's the merchant's relationship. You're just taking the data you need essentially to perform the underwriting decision. And so that's something that definitely stands out within the universe of payment service providers and B2B BNPL providers that we've looked at thus far.
We agree, and it's essentially we're aiming to align interests of all parties involved, which is the marketplace, the seller, but also the buyer. The marketplace and the seller can sell more of their goods. The buyer can get the payment terms he needs, and he doesn't need to go away from the point of sale. He can get it in context. And the third partner, being a potential debt provider, gets highly liquid, highly diversified receivables in the process.
Nice to hear that you are focusing on underwriting, since of course it's an important part for us as a debt provider. Do you want to tell us more about the challenges you're facing and what's your plan to overcome these challenges?
Yeah, happy to do so. So, as said before, we see B2B payments and especially credit-backed payments fundamentally different than in B2C. And that's why we have built with Tilta a different underwriting approach where we not only focus on a checkout invoice financing, but we look holistically at the customer in an infrastructure product. That means we collaborate with our marketplace or e-commerce partners to leverage the various proprietary data they have to provide the customers a credit facility, but also use more underwriting data to get a better credit decision, which is proprietary marketplace data and as well as open banking data. I think that's one of the key differences in terms of our approach, where we've seen, especially in the last 9 months, a very good adoption by our ICP, with now more than 7 platform partners live in our platform. What's also obviously a challenge is that we are starting with our ICP B2B marketplace in a segment which is just emerging. Just in the last 3 years, approximately 300 B2B marketplaces nascent in the market, but it's still a very small fraction of the market. So the shift to online is now happening, where we are very early in the curve, but we see it as very continuously growing, as previously explained, with 36% CAGR. Another challenge, obviously, in setting up the business is that, and you're all well aware, we're venture capital back. The environment is much different than 3 years ago. And when we started Tilta, we made the deliberate decision to build a product which is above all automated where it makes sense, and in a small and experienced fintech team. And this actually helped us to be able to put our product live in just 9 months with probably a fraction or half of the money than our competitors did, which I think is in the end a very good challenge, or was a good challenge, because it needed us to focus on being super efficient and solving the problems on an automatic, fully scalable way, which we've now implemented.
I can't say really how happy that makes us to hear a lender that's focusing on, number one, first and foremost, a credit-focused, credit-forward approach where the underwriting comes first, and you've taken the actual conscious decision to start, as you mentioned, with 7 marketplaces, taking kind of a sandbox approach to say, hey, let's put what we've designed into practice, but on a limited basis, with a smaller sample size, so that if, God forbid, something does go wrong, we have a limited downside, and we can actually take the live feedback and lessons learned to hone and tweak our approach to underwriting, our credit model, our collection approach. And we definitely appreciate that immensely, especially in light of the second point you mentioned with being a VC-backed company. And considering that within our portfolio now at Fasanara, we fund 141 non-bank lenders, the vast majority of which are VC-backed, sometimes it's a struggle we have where we're encouraging the lender to, of course, grow at a metered pace, but really taking that prudent approach and saying, hey, if you're seeing a turbulent macro environment, if you're facing challenges, focus on profitability, focus on taking that metered approach and slow down a little, while maybe in the backside of things, the VC partner might be saying, hey, we need to hit our growth targets. We need to see this customer number by that date. We need to see this compound annual growth ratio in onboardings, on platforms, on customers. So it's really good to hear. And also, I think it speaks tremendously to the VC partners that you've onboarded thus far who trust in your process and approach and who trust you that, hey, you want to do it right the first time rather than just going from 0 to 100 in no time and then blowing up potentially. So it's just really refreshing to hear that. And again, a reflection of why we decided to partner with you, why we're confident in your ability to grow for the long term. So I just really wanted to highlight that and also applaud you for that before we move forward.
Thank you very much. We think one of the key learnings we generated as second-time builders is essentially that you need to invest in scalable processes in key infrastructure where it matters and it's critical, even if it costs more for the start. And examples, we made the decision here is clear the credit decisioning stack, the data analytics to generate insights very early on, but also to the core banking system. Our experience is that not doing it right from the start, generates a lot of organizational, but also technical debt, where you need a lot of manpower to clean that up. While on the otherwise, when you build it right from the start, you can scale with a rather small team. And we think we are now with our 17-person team fully set up to scale to 250 million euro of annual deployment with our existing infrastructure.
Thank you. And so, as you were mentioning before, the market environment changed quite a lot in the last few months. And also, a few days ago, the macroeconomic environment of Germany was in the first page of the Financial Times. So, it would be really good to hear your view on this point. Like, how do you see it? How do you see it evolving in the next few months? How can this also impact your business?
Yeah, thank you very much, Margarita. So what you can look at the macro side is that money, again, costs something since approximately 12 months. And that actually means that unlike 2 years ago, solving a working capital, corporates are actively managing their working capital, right? And that means that a solution like ours, where we help in a B2B transaction solve the working capital problem by paying the seller up front and letting the buyer pay later, is actually very thought after. Because also as a separate trend, we see that there's an increase in liquidity because there's a clear shift from bank to trade credits, so alternative liquidity sources. And banks are more cautious as they miss data for small businesses or thin credit file businesses. With our approach, where we act as a partner and infrastructure provider with our B2B marketplace partners, we can actually leverage their proprietary data on their marketplace about the payment behavior to actually provide these their buyers payment terms, in that end solve the working capital gap. So on the one hand, it really helps us because we have signed, I think, 5 customers just in the last quarter, and we see actively more and more conversations on that. It's now again a problem, unlike 2 years ago. Then if you zoom out a bit and look in general on what we see in general in the market or industries, we not only take proprietary data of our marketplaces, because we obviously also look on the general shift in the environment. So we also classify and monitor industries. And yes, we see certain industries more affected by inflation or other external trends. Examples are the real estate and construction industry, but also the hospitality industry, which is currently affected in our core geographies. And we are actively managing our risk intake in that industry based on that. So we're actively monitoring that. For now, with the approach we see, we don't see any massive shift on the negative side in the performance of our portfolio. But that's also because we use our alternative data approach in the underwriting and actively manage our exposure. So overall, we think it's the right time for a solution like ours, actually.
We can reflect that on the side of seeing portfolio data across Europe and worldwide from lenders who are funding in all different business models. The fact that with 17 people you'll be able to support a 250 million annual deployment flow, speaks to again the validity of the one to many business model of by providing your service via the marketplace, then you're instantly able to enable credit for all those sellers selling on that marketplace. So it's a much more efficient way. We also see from a customer acquisition perspective and also sales, which often, rather more often than not, is something that hampers a lot of early stage lenders is thinking about the customer acquisition and the growth path. And so keeping that in mind and also keeping those numbers in mind you just gave, if you could give kind of a high level view of, where do you see Tilta in kind of the next 5 years? So if you looked 5 years out and thought of goals for volume, portfolio size, market saturation, of course, you don't have to give all of them, but any one of them that maybe is the one that you're using internally with your team that you say, hey, this is where we want to be, and these are the steps we're taking to get there.
Surely, thanks, Matt. We actually think big if you look at 5 years. And the analogy we look at our team is we want to be the Stripe Connect for credit-backed B2B transactions, serving our B2B payment platforms. What does that mean? Today, as a consumer, you're paying nearly everywhere with Stripe, but you don't know it. And the same we want to establish with Tilta, where our partners use our solution because it's engineering focused and you can implement it with a single line of code. But you also get the benefit from our specific white labeled solution, where you can also get a revenue share out of the payments and get what you need most for your customers, which is a high NPS, and we help our partners to trade most. So in 5 years, in terms of numbers, we want to clearly surpass 500 million transacted volume per annum and be operational all over Europe.
Okay, that's a super strong 5 year goal, and I think based on again your track record, experience, team, and approach, definitely within the scope of reasonableness.
Wow, yes, also like one single line of code seems like quite an achievement, and it's quite impressive to hear.
Thank you.
What do you think? Do you have it is also your biggest achievement, or do you have other points you're very proud of?
I think we're proud of many achievements since we started in April 2022. If I would be able to name the biggest, we built a regulated payment product from scratch in merely 9 months with a comparably small team. I think that is a great achievement, and as a result, we're actually super proud to have gathered tier one VCs as backers of Tilta, amongst them 10x founders, but also industry-renowned fintech angels as backers and advisors like ex-founders of the Solaris Bank. This really helps us to build on our vision and execute our plan. I would say last but not least, one of the key achievements is also raising a debt facility with a renowned investor like Fasanara, and that also just 15 months after inception. And if I look on our customer side, we're super proud to getting the trust of large-scale platforms and convincing them of our solution and seeing them actually using our solution. One of our latest partners has implemented the single line of code solution in merely 12 days from kickoff to actually fully automated transaction. And that's also what convinces us that with the degree of automation we have and the overall efficiency, it allows us to carry out the 250 million euro annual volume within the next 15 months.
That's super impressive. I've got to say again, from the perspective of someone who's due diligence and screened now just in the last year, probably 10 different B2B BNPL providers. One of the biggest hurdles that I've seen people facing is the way that they offer integration or actually enable a merchant to offer their payment solution. I think one of the biggest problems and pitfalls is offering something that requires too much work and setup on the merchant side to the point where you might go to the merchant and say, hey, we can enable this much flow. We can essentially offer you access to a bigger set of buyers, but it's going to cost you 100K and two developers 3 months to get it up and running. So that is a tremendous achievement. Could you speak maybe in just a little more detail to the instances of the platforms you've got involved, the merchants, how long it usually takes them from kind of first discussion with you to actually being able to offer Tilta as a method of payment at checkout?
Yeah. So I would say that the fastest implementation we have seen from start of conversation to first transaction was merely 4 weeks. We have one example of a German yeah, producer and e-commerce provider of goods for children called Kindsgut. We launched with them within merely 4 weeks after starting the conversation. Then again, another example is one of our customers providing in the FMCG space. Magalub, as said, we started within 15 days. I think we implemented the solution. We had longer talks before, but from the start, signing of the contract to implementing of the solution, that was merely 2.5 weeks.
Thank you. Yes, this is very impressive, and we are happy to be your partner and to see Tilta growing. So we are very excited about the next steps. And yes, for sure, like great news are expecting for the next few months.
Yeah, so thank you very much, Christoph. We really appreciate your time today. We really appreciate the insight into Tilta, your offering, what you're enabling people to do. Just if you wanted to take a minute at close here to kind of wrap up in kind of a single statement, who should reach out to you if they want to try to enable more buyers to come to them for facilitation of B2B transactions?
Yeah, Matt, Margarita, first of all, thanks for being part of the podcast. I really not only enjoyed the discussion today, but also our partnership. I think the way we have interacted in the past is stellar, and that's a kudos to you. If I could wish for someone to connect us, obviously, we are always happy to hear from B2B marketplace places who always have the problem of providing deferred payment methods to their buyers. So please reach out to us at hello@tilta or on our homepage. You can just reach out to us and we're happy to connect, or even any other B2B commerce company wanting to move to online sale, but have the problem of not being able to provide invoice payment terms or deferred payment terms to their customers. We are happy to help both in a fully online way, but also in an omni-channel setup.
Perfect. So you heard it here. Reach out, visit Christoph at Tilta Online, write to him on LinkedIn, and he will absolutely be happy to get you in touch with the members of his team to get you up and running in potentially as fast as 15 days. And I got to say, that is truly unbelievable. Thank you again. Hope you have a great day. Bye bye.